Hi everyone, welcome back to another episode of Singapore Property Wealth, your guide to making profitable decisions regarding Singapore property investment. I'm your host Jim Tay, and today I'll be sharing about the financials of Singapore property in greater detail. Many of my foreign clients are understandably concerned about factors like costs, fees, and returns, especially since the Singapore property market tends to differ greatly from other countries. So let's delve deeper into some key considerations. Firstly, the property purchase price and value. The primary cost is the purchase price of the property. This can vary significantly based on factors such as location, property type, size, and market conditions. Generally, entry prices in 2024 start from about 1.2 million for a one-bedroom, 1.5 million for a two-bedroom, 2 million for a three-bedroom, and 2.5 million for a four-bedroom. However, it's important that investors consider the value of the property too. After all, price is what you pay, value is what you get. If you manage to snag an undervalued property, it represents value for money. You can spot undervalued properties by comparing its price with surrounding properties, historical and potential future pricing trends, the Singapore government's development plans for the area, among others. Next is the transaction cost. Singapore imposes various transaction costs, including stamp duties, legal fees, and property taxes. Be sure to know exactly what you're paying for before going ahead with the transaction. As of 2024, the additional tax for foreigners, also known as additional buyer's stamp duty, is 60% of the purchase price. This is on top of the regular buyer's stamp duty of 3 to 5% depending on purchase price, and other miscellaneous fees like legal or valuation coming up to about $5,000. An agent fee may also be applicable should you engage one to assist with your search. By the way, nationals and permanent residents of Iceland, Liechtenstein, Norway, or Switzerland, and nationals of the United States of America will be exempt from this 60% and will be treated as having resident status for property tax. 60% goes to zero. These figures are often confusing for foreigners as this set of transactional costs are unique to Singapore. Regulations have tendency to change with little notice too. So make sure that you check in with a real estate professional about the exact transactional costs involved before going ahead with your Singapore property investment. Now, the third point, financing costs. If you finance your property through a mortgage, consider the interest rates, loan tenure, and any associated financing costs. Foreigners can take bank loans to finance their property purchase in Singapore, with a different set of rules and requirements compared to Singaporeans. One key factor that affects how much you can borrow is the amount of housing loans you're already taking up in relation to the property purchase price. This is known as the loan-to-value ratio, or LTV. If this is your first housing loan, you can loan as much as 75% of the purchase price. If you have two loans at the same time, the loan amount drops to 45%. If you have 3 or more loans at a time, you can only loan 35%. Tenure can be up to the buyer's 75th birthday or 35 years, whichever is longer. Interest rates in Singapore are still considered low by global standards, between 3 to 4%. Next is the cost of maintenance and upkeep. Ongoing maintenance costs and management fees, if applicable, should be factored into your budget. While this is not a significant amount compared to the others on this list, it requires payments on a consistent basis, which can add up over time. If you're investing in Singapore property for rental income, you can factor in this cost when deciding how much you choose to rent out your unit. Your tenant can cover this expense on your behalf, should you set your prices correctly. Fees for regular mass market condos range from $400 to $800 per month, which at high-end condos it can go up to thousands of dollars per month. Sounds like a lot of extra costs and fees you need to pay? Don't worry. If you invest in the right Singapore property, the returns will more than cover back your initial outlay. Here are some factors that will influence your ROI. 1. Rental income. If you're investing in residential or commercial property for rental purposes, the rental income is a key component of potential returns. As Singapore is a business and commercial hub in the region, you'll have plenty of tenants to choose from should you invest in a property with a good location and accessibility. In order to maximize your potential rental income, choosing the right property to invest in is critical. Some of my clients managed to secure tenants willing to pay above market rate just so they could secure their rental property before other tenants. In Singapore, a gross yield of about 4 to 5% is common. 2. Capital appreciation. Property values in Singapore can appreciate over time. The potential for capital gains depends on factors such as location, market demand, and economic conditions. In most cases, investors can expect significant increase in property value between 2 to 5 years of their investment. Majority of Singapore properties appreciate in price, but majority doesn't mean all. Just because Singapore is known as a hotspot for foreign property investors doesn't mean that every property will appreciate similarly. Do your research before proceeding with your investment in order to avoid making the wrong purchase. 3. Market trends. Understanding market trends is crucial. If you can identify areas with high growth potential, your property may easily enjoy above average appreciation. While most foreign investors are drawn to centrally located properties, there are hidden gems located in the heartlands of Singapore too, which are often more affordable with further room to appreciate in value. For me, I specialize in the western part of Singapore, where you can find plenty of undervalued properties. Want access to my hot list? Simply ask and you shall receive. 4. Economic factors. Economic stability and growth in Singapore can positively impact property values. Factors such as employment rates, GDP growth, and overall economic health all play a part in determining your property's value. Thankfully, Singapore's economic performance has been strong and steady over the years, with even higher projected growth in the near future. 5. Government policies. Government policies such as urban development plans and housing regulations can influence property values. Staying informed about these policies is essential, as they tend to change with minimal prior warning. 6. Resale value. Consider the potential resale value of the property. This involves assessing the demand for properties in a particular area and understanding the factors that contribute to resale value. I mentioned capital appreciation earlier. While it's always good if your property's value appreciates, it only matters if a buyer is willing to pay for it. In other words, capital appreciation is your gains on paper. Resale value is your potential profit based on actual market demand. 7. Tax benefits. Singapore offers certain tax benefits for property owners, such as the absence of capital gains tax. This allows you to maximize your investment returns and is one of the reasons why foreigners find Singapore such an attractive property investment haven. 8. Market timing. Timing the market is challenging for foreigners who may not follow the intricacies of Singapore's societal trends, but entering the market during favorable conditions can enhance your potential returns. The easiest way to get around this challenge is to seek help from a Singaporean property professional. Many of my foreign clients got to know me through social media, so if you have any questions about investing in Singapore property, feel free to ask. In summary, Singapore has plenty of property investment opportunities, but that doesn't mean that you should just invest blindly in a Singapore property. Understanding the regulations, the financial impact, and your overall investment strategy is key to profiting from the right Singapore property. If you need more information or if you have an eye on a particular Singapore property, I welcome you to reach out. If you're watching on YouTube, click the description below to contact me via my socials. If you're on Spotify or Apple Podcasts, navigate to my bio for my contact info. My name is Jim Tay, and I'll see you on the next episode of Singapore Property Wealth.